Citi downgrading the U.S. markets to neutral this morning, saying, quote, cracks in U.S. exceptionalism story could dominate the equity investing environment over the medium term. Steve Liesman taking a closer look at the question of America's exceptionalism. Steve.
Yeah, Leslie, following the extraordinary movements last week where stocks, the dollar, and bonds all fell, Wall Street reports over the weekend again this morning, puzzling over the potentially historic story over whether U.S. markets and the dollar are losing their place at the top of the global financial food chain. Well, former Treasury Secretary Janet Yellen making some extraordinary statements about the topic on CNBC earlier this morning.
Both the dollar declined and U.S. Treasury yields rose. And what that suggests is that investors are beginning to shun dollar-based assets and that calling into question the safety of what is the bedrock of the global financial system, namely U.S. Treasuries.
So there are two separate questions being discussed around American exceptionalism. The first, whether the outside U.S. returns an overweighting of U.S. and underweighting of the globe by both U.S. and foreign investors, whether that continues. And second, whether there are legitimate questions about the dollar's global reserve status. Barclays writing a very long piece up and down both hands this morning, saying it's hard to think that there will be a liquid and deep alternative to U.S. credit to diversify away from more structurally. Still, even small such moves in reserves over a short period of time can have abnormal price effects. So while stocks recovered this morning, the large part of last week's decline in bonds and the dollar, well, they remain, as do these questions about whether this is a temporary blip, which we have seen before in COVID and, again, the great financial crisis, or the start of something more lasting. Carl?
Steve, thank you for that. A great setup. Steve Liesman this morning.